Today's subject, new properties versus old properties. Hi, I'm Jeff Banks, the founder of Banks Consultancy, and these are our tidbits of the day. And today's subject, when I buy an investment property, should I buy a new property or an old property? We often look at transactions and think about the tax consequence rather than what the underlying thing should be, and that is whether I'm going to make a profit. Now, if you've got two properties, one much older than the other, in exactly the same area, with exactly the same potential for profit return, which one should I buy from a tax point of view? Well, the answer is that should never happen, because the two things should always be a separate profit look at, so to speak. But if you do ever run across this sort of situation, from a tax point of view, the newer one will avail you of better depreciation or capital works deductions than the older one. And what we would suggest to people is that if you buy a property that's less than 15 years old, from the date it was constructed, not the date from where you purchased it, but the date it was constructed, then we suggest you get a quantity surveyor's report on that property to work out what sort of depreciations and capital works deductions that you might be able to get in your tax return to enhance any gearing that you might be creating with that particular transaction. You should never ever look at a transaction from a tax consequence first. It should always be based on what potential profit I can get. There is no point going into a negatively geared property if there is no potential for capital gain down the track. It defeats the purpose. All you're doing is feeding a mortgage that will never give you a return. If you want to sit down and talk about any of this sort of stuff, please contact us at Banks Consultancy, and one of our trained consultants will run you through the concepts that this sort of thing is about. You never know, you might even get to talk to me, which is probably even a better thing. But like I said, tax should never ever drive a transaction. It should only ever be the consequence. But from a tax point of view, we're allowed to set up transactions after we've worked out what the profit motivator is, to make sure that we put as much money in our pocket as possible. I'm Jeff Banks. These are our tidbits of the day from Banks Consultancy, not your ordinary accountants.